So, my name is Adrian Boothie. We're going to take a look at stop orders. Not necessarily to be confused with a stop loss. A stop loss is a type of stop order, if you like. And let's have a look at really what they are. A stop order is, in layman's terms, when you want to place an order to buy a market above the current market price. Or you want to sell a market below the current market price. So in other words, really what you're looking for is to try and capture a bit of momentum. You're looking to see the market moving in a particular direction and join the party. Let's have a look at a basic example on the chart here. So we're seeing price X is where my break order is. We might call it a break order. So we're seeing the price move down, then it's starting to rally. And I'm saying, look, bit of resistance up here. I think if the market goes up to price X, then the market is going to carry on and go further up there. So we can't use a limit order for that, because a limit order to buy says that's the maximum I'm prepared to pay. So if the maximum I'm prepared to pay is price X, then of course at a lower price than that, I'm going to be filled on that trade straight away. Because if I'm prepared to pay 100 and the market's quoting 99, then of course I'll buy it at 99, won't I? But I'm not saying that here. What I'm saying is current price is 99. I think if we go up to 100, then we're going to carry on to 102, 103, 104, and so on. That's when I want to get on it. I want to get on it as the momentum takes me higher. Okay? So effectively, price X is the lowest that I'm prepared to pay for that particular market. It's a very useful type of order for two reasons. Number one, a breakout order, as I say, trying to join a market that's getting on some decent momentum. You might be interested in breakout strategies, all of that sort of thing. And also something called a stop loss. Now, you should be familiar with what stop losses are. These are orders that can be used to help us limit the loss on a particular transaction. I'd encourage you to use stop losses on your order and not necessarily to move them too much. But in any case, effectively a stop loss is absolutely a stop order, but it's used in a slightly different reason. Effectively, what we're saying is here, we're short. As the market goes against us, goes up to price X above resistance, we're saying we don't want to be short anymore, so it's going to take us out of that trade and buy the market. So a stop loss, breakout, whatever you want to call it, is effectively a stop order. You can enter on stop, you can exit on stop. So there you go. Confusing, isn't it? But just go on the basis that, look, essentially a stop order is when you want to buy at prices higher than where they are currently, or sell short at prices lower than where they are currently. Okay? When you look at a particular platform like this FXCM demo account that we have here, if you just click on an entry button here, so in other words an order, it actually automatically recognizes whether it's going to be a limit order or a break order there. But typically, if you want to place a stop loss, you would actually attach that to the trade. So let's say we wanted to do a break order. Well, effectively, we're going to buy it above current market prices. You would simply place that order. It is intuitive enough as a platform to know whether it's going to be a limit order or a stop order. So what we can then do is actually add a stop loss into the trade like that, and here we can place our trade. Weirdly enough, there's two stop orders I'm placing there. Confusing, huh? But effectively, all I'm really looking at doing is buying the market at a price that's higher than currently. That is a stop order, and a stop loss is then looking at trying to sell the market at a price that is lower than the current market price once I'm into the trade. And that's it. That's stop orders, everybody.